Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And yeah, today we have a very interesting subject to talk about. I'm going to be discussing what I believe is going to be happening within the market in the next couple weeks, months, and even possibly maybe a year, 2 years ahead. It all depends on what you are following. I will give you guys my overall opinion and also outline what I believe is going to be happening. I seen this tweet though this morning from Zero Ica over on Twitter, and we do see the worst tactic that macro doomers are trying to instill is that another bull run is out of the game. It's easy to ride the trend while things are favoring your bias. The odds are that new narratives, fresh capital, technology improvements, and hype will drive this market towards the next run. You don't know the magnitude. We just know that another run will happen. Your goal should therefore be accumulate, be interested in the market, develop a rational approach, have a plan, backtest strategies, gain knowledge 1% more than the previous day. This is how you position yourself well enough to exploit the next wave. It's a game of patience and perseverance, desire of getting better. Most important, make it count. We don't know if the next one will be the last opportunity to make solid gains. Always remember it. And yes, I've actually talked about it, right? To me personally, I believe that a run-up happens and catches everyone off guard way before they believe it will. We only have 2 cycles to technically go off of. If you want to go all the way back to 2011, then technically, yes, we have 3 cycles. But when we really kind of look at what's happening around this market, I believe that the data doesn't really align with the overall 4-year cycle. Everyone has been following that 4-year cycle forever. But to me, I believe that the 4-year cycle coincidentally aligns with liquidity cycles. That liquidity cycle could ultimately change at any moment as soon as we get liquidity flowing into the market. Now, with that in mind, what do I believe is going to happen? Well, let's talk about it. So first off, let's talk about the ridiculous claims that we are seeing over on Twitter. So from Whale Wire, this has been one of the most bearish accounts on Twitter. You probably know about this account going back to 2020 as well as 2021 and even previously. I said under 10K in a heartbeat. The FUD out here is honestly ridiculous. It's coming from the same accounts that were bearish all of 2020 and 2021 and previously too. This market will defy all expectations. And again, that last sentence there that I said, the market will defy all expectations, is 100% on point because everyone is expecting us to follow the 4-year path, follow the halving, follow this, follow that. But ultimately, all we do is follow liquidity cycles. As we do see at this tweet, they're basically talking about how they own 200,000 Bitcoin, meaning the US government. And they're saying that if they decided to sell that, the prices would be back under 10K in a heartbeat. This is not the case. In my opinion, even if they dump 200,000 Bitcoin on the market, we might plunge, we'll say, 3, 5, 10K possibly, but I highly doubt that it's going to be that severe. But it doesn't matter, right? All of this is coordinated FUD to make the markets bearish. I mean, this tweet itself was seen by 1.4 million individuals. It is absolutely ridiculous. And this is exactly what causes the prices in the market to drastically change. As we do look at a lot of these accounts, so they come together to FUD at the same exact time. To me personally, I think a lot of this is coordinated FUD to manipulate the market. But as we do look at things, I even said over on Twitter that the market has been flat the last couple days, leading to many overreacting. I've seen many accounts calling sub 20K Bitcoin, death of meme coins, etc. When the market begins to go vertical again and meme coins continue higher, most will be caught off guard because I do believe that meme coins will go higher significantly because everyone, and I mean everyone, is coming out of the woodwork to short meme coins and call the death of them and that, oh, they're going to go to zero, blah, blah, blah. And usually when we see a coordinated push like that, the opposite happens. So I said the show is just beginning. Now with that, let's talk about a few things around the banking sector. So as we do look at the macro, yeah, technically speaking, the banking and the traditional world of finance look like it looks like it's in trouble, right? So the US regional bank stocks today, PacWest down 29%, Western Alliance down 6%, Metropolitan Bank down 5%, Fifth Third 4, 3, 3, 3, and 2. Every time the crisis seems to be coming to an end, something new emerges. The regional bank sector KRE is now down 38% since January 1st. We are officially 2 months into the banking sector or the banking crisis, sorry. And also, guess what we've seen today? Well, we've seen a major push from Jamie Dimon. That's right. So first off, let's go back to May 5th. Breaking, US bankers urge SEC to probe short sales, reduce abusive trading. Basically, what they wanted to do was ban short selling of banking stocks, which I thought was pretty interesting considering the fact that when you go back in time to 2008, the short selling ban of September 18th, 2008 marked the start of the panic collapse of the stock market. And here we have JP Morgan predicts short seller ban after US bank turmoil. Comical, right? Well, now today, more than ever, we have JP Morgan once again calling for a ban on short selling, as well as, check this out, JP Morgan calls for people who tweet to short banks to be punished by the government with the full force of the law. But go back to September 29th, 2020. Check this out. This is from the Department of Justice. JP Morgan Chase & Co. agrees to pay $920 million in connection with schemes to defraud precious metals and U.S. Treasury markets. You can see, look at criminal. I mean, how many times is criminal mentioned here? Shout out to Lerziet for this. But he's quoting Crypto Insight that posted this quick minute-long video over on Twitter. And we do see CEO of JP Morgan, Jamie Dimon, calls for the shorting of bank stocks to become illegal. With the pressure mounting on the U.S. banking system, there have been rumors floating around that the shorting of bank stocks may be banned. I personally don't understand what problem this solves. We are already seeing a lack of trust in the traditional banking system. Doesn't this confirm the issues to the retail investor? Additionally, in JPM's recent acquisition of FRC, they negotiated terms so favorable for themselves with the Fed, they instantly made $2 billion. I personally want to get away from banks as soon as possible. It's no better in the UK with the recent law being floated to give HMRC the ability to cease Bitcoin and crypto held on exchanges. What the hell is going on? If you haven't already, grab yourself a hardware wallet, not your keys, not your crypto. And of course, you guys already know me. I personally love cold storage. You guys can go ahead and get your cold storage if you want from the links down in the description below, as well as in the comments below. Personally, DCENT Wallet has been very good, but obviously you can go with Ledger. But I do think everyone should be holding their keys on cold storage, because right now we are seeing a massive war brewing from the traditional players, the bankers themselves. And I do think that trust within the traditional banking sector is completely gone. If you trust the banks right now, I have no idea what world you are living on. These banks themselves, they're gone. They're dead. They're broke. They're like, these banks have lost all support from the general public, or at least they should have already, because they have done nothing, and I mean absolutely nothing, for us. They have done everything to make themselves richer, and they continue to get rich off of these major crises. It's a big deal, but listen closely to this video real quick.
Explain to me, how does Jamie Dimon have the nerve to say this?
Or people going short and then making a tweet, about a bank, they should go after them. And vigorously, and they should be punished to the full extent the law allows it. So I think it's possible it's taking place. We have no evidence of it, yep. But my experience in life has been don't assume too much.
Do you think that they're looking into it?
I hope so. I don't know.
So he's calling for shorting of bank stocks to be banned. He thinks if you go short on a bank and then tweet about it, you should be punished by the law. Last I checked, we were supposedly in a democracy with free markets. In free markets, if a company is shit and you go short on it and give your opinion, that's absolutely acceptable, and that is part of democracy and capitalism. We don't live in a communist society, but this is communist. What is going on? It could be even close to a dictatorship. I don't know why he's moaning anyway, because with the acquisition of FRC, JP Morgan made $2 billion overnight. Explain to me.
And this is like the serious problem with all of this. These bankers are defying the laws. They're defying everything around what the free market was built upon. This is full-on control, and you could tell who's pulling the strings. This is a big deal. And I also think that combined with this is what's going to push crypto even higher. Why? Because as trust is completely gone around the banking sector, all that trust and all that capital that is around these banks is going to flow into crypto. I strongly believe it. because crypto is for the people. I've said it many times on this channel. And what's crazier is that we continue to see a lot of major players like Peter Schiff talking about how the bulk of the financial crisis, which just got started, is in our future. We're just at the tip of the huge iceberg right now. And also combined with this, the CPI report. So as everybody's looking at the CPI report, I don't even pay attention to this anymore. You know why? Because all of this is a lie. We do see breaking April CPI inflation data shows US inflation rate falls to 4.9%, below expectations of 5.0. Core CPI inflation is now at 5.5, in line with expectations of 5.5. This marks the 10th consecutive monthly drop in the US inflation rate. A Fed pivot may finally be near. Keep in mind, the Fed is set on their 2.0% inflation target. They've been asked if they would raise it. Answer was no. Perhaps this means a pause is coming rather than a pivot. Next few months of data are key. And I even said over on Twitter, going back in time to March, I said retail is being told lies right now, that their bank accounts are safe, depositors will be covered, and all is sunny in the world of finance. The truth is that the Fed is at a very scary point in time where either the decision to pause or raise rates will ultimately lead to systemic chaos. Because guess what? The Fed is in checkmate. I've said it many times as well, that no matter what the Fed does next, it is not going to look pretty for the traditional banking sector. And guess what we continue to see? We continue to see lies. And what's crazier about the CPI report is that it doesn't even include food. It doesn't include electricity. It doesn't include transportation. It doesn't include any of that. The CPI report is complete garbage. It's complete nonsense. That's why I don't pay attention to it. And even over here, what you see, never forget, CPI is fake data. They changed how they count inflation multiple times, so they report a lower number to reduce cost of living adjustments on Social Security. The real inflation number is easily 2 times what they report to the public. Listen closely to what this video is saying. This is from Peter. You guys already know about Peter. Go check him out over on Twitter as well as on YouTube.
Monthly inflation numbers are coming out today, meaning we get to find out how much of our life savings, paycheck, and grocery budget is left after the Fed and its pet banks are done with it. Markets are expecting the same bad news we've had all year, that inflation is not going anywhere. Specifically, it's expecting 0.4% on the month, which is an annual inflation rate of 5%. Meaning you lose $50 on every $1,000 you make and $50 on every $1,000 you have. Now, 5% is about 2.5 times the Fed's alleged inflation target, which is pretty pathetic after the most aggressive rate hikes in 50 years, actually the most reckless rate hikes going by bank collapses. So what is coming next? The main drivers of inflation right now are 1, federal spending, 2, the bank crisis, and 3, the Fed itself. In short, expect federal spending to drive inflation up, expect the bank crisis to push it lower before hitting us down the road with higher inflation, and expect the Fed to run up and down the field like a helicopter parent at a soccer game, screaming at the umpire and shooting fresh trillions at anything that makes a sudden move. Now, taking each in turn, if, as expected, nothing comes from the debt ceiling play fight, the $1 trillion federal spending spree keeps grinding along, as allegedly small government Republicans settle back to their traditional role as uniparty sidekick, fleecing the people so long as they get their crony crumbs and foreign wars. Next is the banks, where despite the Fed and Treasury dumping trillions of your money into bailouts, we could actually see net deflation. This is because money is flooding out of banks to money markets faster than bailouts are pouring it in. And thanks to the magic of fractional reserve, that flood effectively cancels most of the dollars that moved. Banks cannot Xerox them into more fake dollars. As for the bailout money itself, going by 2008, the banks will sit on it instead of lending it out, savoring their stolen goods instead of letting you have a ride. Bad for the economy, bad for credit, super for the bankers. Now, in theory, if that flood of bank depositors fleeing collapsing banks paying 0.1% for not collapsing money markets paying 5%, if that flood gets big enough, we could even see deflation for a minute. But don't get excited. Stuff will not actually get cheap because any modern central bank that sees a falling price cranks up the money printers to 11 to gobble it all up. Plus, unless this is the end of fractional reserve banking, sadly, it is probably not, all of that money will eventually come back to be Xeroxed once more. As always, inflation's a ratchet. Put it all together, and short-term inflation is a tug of war between big spenders in Washington and money-losing banks, all in the backdrop that we've still got a big hunk of inflation saved up in the system, like a golf ball in a snake. Given that they printed 35% of the money, but so far we've only actually enjoyed 16% of that in inflation. So there's a double-digit chunk of inflation waiting for us, even if they don't do something stupid, which they certainly will. All right, we'll be watching. See you next time.
And this is exactly what I've been focused on as well, especially around those money market funds. A lot of people have been questioning, like, Nick, how can we have crypto go parabolic? Like, how can crypto, make new all-time highs in 2023? That's right, in 2023. Well, it's very simple, right? You have that capital flood right back into crypto from money market funds. When we go over here, Google search interest for money market funds is now at its highest since September of 2008. September 2008 also happens to be the month that the Lehman Brothers collapsed. People are searching for alternatives to bank deposits. What's crazier about all of this is that there is over $5.3 trillion in these funds, which is absolutely wild considering the fact that when you go back to April, as well as March, and even February as well, these have been increasing in value quite substantially. And once this money moves back into crypto, it is going to be extremely large. And when I say back into crypto, I just mean it's going to flood back in. And the reason why I say that is because this money has been waiting on the sidelines for that massive collapse that everyone has been waiting for around the traditional world. And although, yes, it is starting, they're essentially waiting for a recession to happen. I don't believe that a recession is going to be happening this year. I actually don't even think that it will happen until around roughly Q1 of 2024. That's a little long of a wait. So once we do see crypto start to go parabolic and we have a major move over, we'll say $40,000, a lot of this money is going to trickle around, and it could very well trickle into crypto. It could trickle into stocks. It could trickle into gold and silver. I've been watching a lot of these areas. I've personally been diversifying within crypto and also even outside of crypto, and gold and silver definitely is one of those big areas. But I do think that this is where we should be focused on in terms of money market funds and how this could react to crypto if crypto does start to have that major move to the upside or that wave 5 target that everyone has been claiming. In my opinion, I believe that a wave 5 could very well happen this year. I also believe that all-time highs could happen this year as well, depending on how much liquidity really does start to move around. But it seems as though a major liquidity event is brewing, and I think that this could actually defy the 4-year cycle and ultimately catch everyone off guard that has been waiting for it for so long. These markets are not that predictable. It has been predictable for the last couple years and the last couple cycles, but what if everything does change and it catches off? All of those individuals that have been waiting and planning around this 4-year cycle for so long, and their money is on the sidelines too, because they haven't really been buying this dip because they've been waiting for 2024 to buy for 2025. To me personally, that aligns perfectly with the idea of don't follow the herd and be your own player. So with all that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. So hope that you all have a beautiful day or a beautiful night wherever you guys are on this beautiful world. That's been Nick. Peace out, guys.